Hi, this is Jack from Alpha Charts with a State of the Market video. Today is March 21st, 2020. Before we get started, this is not a recommendation to buy, hold, or sell any stock or security. This is for informational purposes only, and I may hold positions in some of the stocks mentioned. Know your time frame and risk tolerance. All right, so getting to the charts, we're going to stick with weekly charts right now, because in the end, it's just such a powerful move. I think the weekly chart helps us take a look at it a little bit better. All right, so here's the SPX, and you can see literally went straight down. Now this is a 2018 low right over here, and this is where we're kind of sneaking right below it. So if this level fails, which as of right now it has, right, where could we potentially go? Well, I think that this level right here, which is a 2015-2016 resistance area, is a good possibility, which is only about 7 or 8%, give or take, below where we are now. So that is a very, very possible area for us to hit and then see what price does. Because the move down has been so strong and relentless that any counter trend rally should be, in my opinion, suspect. So yes, we're going to have long, hard, we've seen these moves 5% both ways on a daily basis. Crazy. But any bounce is suspect until we can get true bottoming type action. I think this type of bottom is more likely than this type of bottom. I think this is more of an aberration, even though we do probably have some recency bias that this is what's going to happen. I think this, over a period of time, is the more likely scenario. Now, if this fails, right, let's say it comes down here and we get a nice little bounce, maybe back up to here, and then we come back down, which is a very plausible scenario. I think that this level is the next stop. Again, and that's around 1550, 1565-ish. And I think this is a really, really important level. Even a much stronger level than this. Just look at the distance in time, 2000, 2007 over here. It took, 7 years to come back and test this level until we finally broke through in 2013. So I think that's a huge, huge level. So again, what am I looking at? This level. And this is a much stronger level. Now this blue line here, I know you've seen this before, but I'm going to show you once more. This blue line, let's go to the line chart, is literally from the 1932 low of the stock market, right? Great Depression here. Here's the low, uptrend line all the way through. And you see it has remained important throughout history once, twice, 3 times, 4 times. Interesting spot where it intersects here. Not saying we're going to get here, right? Don't know if we're going to get here, but this line, I think if we get close to it, needs to be respected. It by far is held very strongly throughout the history. We're talking about 80 years, 90 years now, 90 plus years. So this long-term trend line, super important. Again, that's on the monthly charts. We're not there yet. We're here. And so that we, 1 level, 2 levels, and here's that blue line somewhere in this range. Maybe we hit it. Maybe we undercut this level, hit it, and then bounce up. I don't know, but just to be aware of. All right, moving on. Qs. Here on the Qs. So this trend channel I've been watching for a while, and we now have just broken below it. We have just broken below it. So if we bounce right back and get back inside of it, great. Really no harm at that point. But if we don't, then I think that this green area is potentially our next stop. And we're looking at 50 points below. Yeah, maybe 145-ish. Maybe that may offer something. But I think the more likely scenario is 115 to 120. So we'll see. Again, if we get a nice little bounce back and get inside this trend channel, no big deal. We just move on. All right, IWM. by far the weakest of the indexes. You see we are at this potential area here. If this rolls back over, I think that this is a much bigger area. Again, it's about 16% lower. And this was, again, the 2007 and 2011. This area right here may offer a stronger support area. Dow Jones Composite Average, pretty big area that it's at right now. It's right at that supportish area. A drop below here if it continues further down. And I think this is an area that may act as another support. Again, quite a bit lower. Again, counter trend rally, very possible right here, right? This would be a logical spot for it to rip higher and to get to suck in all the bottom callers. I just don't think we are at a bottom yet. I think a bottom is going to be more likely this than this. So my important ETFs, I think the financials, super important. And I was super excited and bullish up here. Down here, not so much. Again, broke this important level. You know, the other indexes, you see the indexes are right at this level. Well, financials have already dipped below that level. And this level obviously is the 2015-16 area. We're now below it. A lot more. And there's a lot of white space down here. So something to be aware of. Moving on to semiconductors. Well, this is, like, for semiconductors, the area, right? This was the 2000 highs, and this was the clean, the breakout, the retest, the move higher. Everything is wonderful and hunky-dory. Now we're back retesting it again. Break below 100, right? Now it didn't hold. It did break below 100, but then we kind of came back up and closed at 101.06. A break below this low, and man, things could get really nasty really fast. So again, it hasn't done it yet, right? Not yet, but another move lower, man, things are dicey. Again, I think SMH is probably one of the most important indicators. I consider this an indicator as well as something I would trade, but it's also an indicator of future growth and future market health, I think. And it's at support. We'll see what happens. Big fan of lumber as an indicator, and we held this area. Again, this is the 2016 area, so it held, it bounced a little bit. A rollover here, and again, there's a lot of white space. I think that would be a very, very bearish indicator if we see wood rolling over here. All right, so put call. This is equity only put call ratio on the weekly chart, okay? So again, you're not seeing all the daily modulations, right? On the weekly chart, you can see we never really even got into a very bearish mode. It's kind of trending that way, but it hasn't really gotten there yet. I mean, here we go, 2018, in December, very bearish. What are we here? 2016, very bearish, right? This is obviously in 2010, very bearish. These marked reversal areas, major reversal areas. We're not there yet. This is another reason why I believe that there's more pain, more downside, whatever you want to call it, coming up. Again, we're not seeing this type of capitulatory move here. That's what I'm looking for. These will be nice, right? If we, on the weekly chart, could get up in this way, great. But, this is such a strong move. I think you need one of these type of bars to make it really stick. Okay. Gold. Let's look at gold for a minute. Gold, everyone was on the gold bandwagon. It broke out, and now it's fallen pretty hard. So I'm only bringing this up because, really, there is no safe haven asset. Maybe dollars, right? I haven't even looked at this chart, but let me look at dollars. Yeah, look at dollars. Boom, straight up. Maybe, so cash. Right now, cash is the only true safe haven. High yield bonds, they tell a story. Again, I use this more of an indicator. straight down. I mean, this is as much of a risk-off indicator as one could see. Until we see a stabilization in high-yield bonds, which means people are willing to put money at risk, then I think, again, the selling is not over yet. The Bank of America high-yield option adjusted spreads, right? So this is credit spreads. And this is zoomed out to the maximum it can go. And you see, we got into this range up here in the around 10.18 or so in 2001. Obviously in 2008, it got up to almost 20. Well, right now we're at 9.82. So we're almost to the point of this 2001 recession levels that we are at right now. As long as these spreads are increasing, again, that's another risk-off indicator in my book. The VIX. VIX, through the roof. I mean, 66. We've only seen 66 recently since, 2008? I mean, I'm going back here. So 2008 is the only time it's been higher. And if you notice, when it did get that high, right? Okay, it didn't come straight back down. It kind of danced around here, made a lower high here and lower high here, and then kind of is working its way down, right? In 2008, and then here's 2009 again, more like a bear flag look almost, and then boom, back down to normalcy, right? Well, we're not seeing any of that yet. So can the VIX go higher? Absolutely. But I think you need to see a little choppy around, similar to this, maybe similar to this, similar to this, and that is more of a topping type pattern for the VIX. And as the VIX is decreasing, it's more of a risk-on environment. All right, so value line geometric index. Again, I use this for more of a risk-on, risk-off, a breadth type indicator, and literally it's telling you everything is getting hit right now. I mean, value line geometric index is going straight down, and so everything is getting sold. There are no safe havens. All right, and so I'm going to let's just go back to SPX real fast. Again, know your levels. I think that there is a lot to I think that this is a major level and not too far down from here. I think this is the major level and this trend line. So, will we get here? I have no idea. No one knows the future. But I think this is really, really, really important. All right, so I'm going to leave with something I just saw on Twitter, and this is actually a webinar that Brian Shannon and Joe Fahmy are going to be putting on this Sunday. I mean, when it comes to people, like if I had to follow only 5 people on Twitter, Brian Shannon and Joe Fahmy are 2 of those 5, and they're putting on a webinar together. It's free. So again, I'm excited to take a look at this. Again, they have years and years and years of experience and knowledge, and they're professional traders. And so if we all want to be, professional traders, I think listening to professional traders and how they think and how they talk, I think that is really, really, really important. So check them out. Again, Brian Shannon at Alpha Trends, Joe Fahmy at JFahmy. And again, it's Sunday, March 22nd, 6 p.m. I'm already signed up for it. I'm really looking forward to it. Again, guys and gals, stay safe out there. Wash your hands, and health before wealth, of course. And this will pass like everything else. Take care.